Hey folks, welcome back to Real Estate Investing Unmasked. Today we're going to talk about the difference between a pre-qualification and a pre-approval. It's really important, the difference between the two, and this is step 4 of how to buy a house. All right, so a pre-qualification, we'll start with that first because it's actually the lowest on the totem pole of what's important when it comes to buying a house. A pre-qualification is basically you giving your information to a lender and saying, hey, can you tell me how much I can buy? What kind of interest rate would you give, hypothetically, to somebody like me? It gives you kind of a ballpark figure of whether a lender is willing to lend to you or not based on the criteria you give them. Now, it doesn't mean they're going to verify everything that you give them. Matter of fact, pretty much the only thing that you're going to give them that they can verify is going to be your credit report. You might send them some bank statements, but for the most part, it's just you telling them information over the phone. Now, the more information you give them, the better the information they can give you. It's kind of like garbage in, garbage out, GIGO, right? Back in the computer programming days. But in the end, the lender's not held to lending you the money that's in the pre-qualification, which is why most of the time, before you start buying a house, you get a pre-approval. And that's what you're going to want to aim for. So what's a pre-approval? Well, in this case, you have submitted a lot of information that the lender has taken, and they've done pretty good research, not very in-depth research, but very surface level research on you to see if your information is correct. You may have to give them your most recent 2 years W-2s or your business tax returns if you own your own business. You'll have to give them the most recent 2 months worth of pay stubs, typically, could be 1 month, depending on the lender. They're going to want to see your bank statements for the last 2 to 6 months, depending on how you get your money. They're going to want to verify that you have a down payment to be able to make that, to be able to get a mortgage. So once they know your down payment, they kind of can figure out what kind of loans you can get depending on what loans are available. If it's a 3.5% down or a 5% down, 10% down, 20% down, etc., they can gauge how much of a loan you can get based on what kind of down payment you have available and what your debt to income ratio is, which we talked about in the last video. I'll put a little link up at the top that you can click on to see that video. Now, the credit check for a pre-approval is required depending on the percentage that you're going to put down. Say, for instance, you're planning on putting 30% down on a mortgage, you probably don't need to worry so much about your credit score. If you're putting 10% down or 5% down, they need to know your credit score. But anything more than 30% that you're putting down, credit score really doesn't matter that much. Now, a pre-approval is an offer to lend you money, but it's not a guarantee they're going to lend you money. So the difference is when you submit all this information to the lender, they're doing, like I said, the surface level research on you. They're seeing if they want to lend you the money, but they don't actually get into the weeds of it all until you actually have a house that you're in the process of buying. It's an offer to lend, but it's not a guarantee to lend. The pre-approval you get is usually good for 90 days. After 90 days, they need that information again to be updated to see if anything's changed. Could be your credit's changed, could be your income's changed, could be your bank account has changed. There's a lot of things that could change in 90 days, believe me. So if you feel like you're kind of being audited, you kind of are, because you're giving them your financial picture of everything that's going on. If you're going to borrow from your 401k to make your down payment, you're going to need to give them your 401k statements. So again, you need 2 to 6 months bank statements, your 401k statement if you're using it at all. You'll need your pay stubs. You'll need your W-2s for the last 2 years and bank statements. You'll need your business tax returns if you're in business and that's how you receive income. If you have money in the stock market and you're receiving dividends or you're receiving income from the stock market in some other ways, then you also need to show them declaration. You may also need to show them an income statement showing that you do have money into mutual funds or into the stock market, so that you can prove I have these funds available to me so that you are most likely going to lend to me. Now, when it comes to buying a house, a pre-qualification is nice, but it's really not going to help you get any offers on a house. In a buyer's market, you can mostly get away with having a pre-qualification, going in and talking to the other side and saying, hey, I'd like to buy the house. But in almost every market, you have to have a pre-approval. For sure, in a seller's market, you have to have a pre-approval before you can put an offer on a house, because there are going to be so many people that are going to be trying to buy the house in a seller's market that they're going to get to pick and choose from the ones they want. And if you're not pre-approved, they don't want to deal with you. Matter of fact, that's why a lot of times they pick a cash buyer, because they know they've got the cash, versus somebody who's borrowing because they may or may not be able to close escrow. So in a seller's market, you need to make sure you have that pre-approval before you go house hunting. So this is step number 4 to buying a house, is getting your pre-approval. If you have any questions, feel free to ask down below in the comment section. You can also reach out to me via my website at www.watchbob on youtube.com, and I do have a way for you to contact me there. And if you'd like to give me a thumbs up, don't forget to subscribe. This is only step number 4 of 11, and I'll have more videos coming out soon with the other steps. I'll see you there.